my studies have suggested that the semiconductor industry, which of course has become so prominent and
semiconductors,
right, in Taiwan, actually benefits from a stronger NT dollar, not a weaker NT dollar. And this, I believe, is because they are so capital intensive. They need to be building new equipment and importing that equipment so much over time that having a stronger currency actually makes them more competitive.
Hello everyone, welcome. I'm Catherine Liu, and right now we're watching Taiwan Plus Point. The war in Ukraine has made us accustomed to hearing news about sanctions and blockades of financial assets. The cost of the conflict has spooked global markets and world economy. Today, I'm with Mr. Peter Kurtz. From the financial point of view, we're going to talk about who is actually bearing the brunt. So Peter, so glad to have you here. This is the first episode. You've lived in Taiwan for more than 34 years. So my very first general question is about inflation, right? Everyone is talking about inflation right now. It actually has a real life impact on everybody's wallet. How serious is it right now here in Taiwan?
Well, first of all, Catherine, thank you very much for having me on this program. As far as the concerns about inflation, they are as dire, quite frankly, as any time I've seen here in Taiwan. Although I've lived long enough to see pretty bad inflation back in the States back in the 80s as well. I don't think we're quite at that stage, but we are at risk for that. The reasons are a lot of the same background phenomenon back then are happening now. We are seeing, of course, rise in oil prices, which was one of the key triggers. And energy is clearly one of the key drivers to prices across the entire economy, whether it's from transportation to agriculture, production of fertilizers, or plastics and so forth. And secondly, we have the backdrop of extremely high monetary growth that we also saw back in the old days. So all these factors suggest that we do need to take this problem of inflation seriously. Although Taiwan, in my experience anyway, has had lesser inflationary pressures in the past because it is still a fairly open economy. We export and import quite a bit of our total GDP. And that helps take off some of the pressures, but of course it does mean that we are also importing a lot of energy, a lot of oil.
Right. Do you think it will remain elevated?
This is the big question.
Right. And everyone is very curious,
exactly.
Right? You say it's bad already.
There are reasons to think that this is triggered by short-term bottlenecks in the supply chain that will be resolved over time. And of course, we now have the Ukraine conflict, which one hopes will not last for a long time. And even if it does, at some point there will be adjustments made that will allow for a replacement of some of the shortages that have been created by the conflict. But to some extent, there will be no way of replacing all of the grain and all the other commodities that have been produced out of Ukraine. So there will be shortages, but again, what we're concerned about is not necessarily an elevation of prices, but a continuous elevation of prices go over time. And that's more of a psychological issue, and it's also a matter of controlling wage growth. And this is one factor that could create that ongoing increase. You raise oil prices by 10, 20, even 100%, and it's a one-off event. But if there is a perception among workers that their cost of living is going to continue to rise, they're going to demand higher wages, and that will only increase the prices of producing these things. And that's where you get this sort of ongoing process of inflation.
So it's like a complex thing. When we talk about inflation, we often think of interest rate. So the Central Bank of Taiwan has recently raised interest rates by 25 basis points. Do you think it will be the first of many interest rate hikes this year?
Interest rate hikes, one-off interest rate hikes are not very effective because once they're done, people just go back to their normal spending patterns. And so for them to be effective, there at least needs to be the perception that there will be more to come. And for that perception to be built in, you have to have at least one more rate hike. And certainly to the extent that Taiwan's interest rate policy is going to be influenced by U.S. interest rate policy, and the U.S. Fed has already given indications that there will be most likely many more rate hikes to come. I don't know how many. Then the chances are we're going to see at least a few more coming out of Taiwan. Although historically Taiwan has not always followed the Fed to the same extent, while they have typically followed them to the same direction.
So do you think they're closely monitoring right now at this stage to compare with, the pace of America and also European countries?
Oh, for sure.
Yeah.
And obviously many think here in Taiwan that a weak NT dollar is a good thing for our exporters to be more competitive. But this also means that the cost of imported goods will increase for the average consumer. And at the same time, my experience has been that, not my experience, but my
expertise.
Well, I won't call it expertise, but my studies have suggested that the semiconductor industry, which of course has become so prominent and
semiconductors,
right, in Taiwan, actually benefits from a stronger NT dollar, not a weaker NT dollar. And this, I believe, is because they are so capital intensive. They need to be building new equipment and importing that equipment so much over time that having a stronger currency actually makes them more competitive.
Well, it's such an important element for our economy as well, right? And they link to global market. So you talk about the bottleneck of the supply chain, right? And we touch upon the interest rate hikes. Do you think it will effectively contain inflation?
I think it's containable.
Containable, but not necessary.
It depends, of course, on the resolve of the central banks. And as I said, right now they seem to be, or at least coming out of the Fed in the U.S., they are talking a very tough game. And
tough games.
Yeah. So if that plays out, then I think it is containable. And as I said, it's a question of whether this spills over into wage inflation, which brings up another issue, though, of course, so that is that during COVID, because we're also coming out of the COVID epidemic, we're going into the Ukraine crisis here.
It's really, like endless crisis,
exactly.
Right?
This is really
one after another.
We're going to be reading this in the history books for many decades to come. This will be a very unique period. But in any case, what the impact of COVID seems to have been to have I won't say permanent, but certainly a very marked impact on the labor market. The people are not going back to work the way they, to the extent that they had beforehand. I think a lot of people realize that, I've been holed up at home and I didn't spend anything and I got along okay, so maybe I don't need to earn that much, or I don't want to take the risk of going out and milling about with people. Given the fact that COVID still is...
They want to avoid the probabilities of getting one.
And so the labor forces has shrunk, and I think that's a global phenomenon as well. And that's going to be pushing a little bit of upward pressure on wages as well. So this is another issue. It's, again, more of a supply issue than it is a demand issue, but it will, as I said, create a sort of feedback effect onto demand as well. I think, though, the other angle to your question, though, is will the economy continue to grow? Because you really don't normally have inflation in a recession, in a recessionary environment.
Recession fears.
And this, could create an even more negative scenario of stagflation if we have a slowing economy, but those the inflation rates continue to rise. So this is a very tricky situation for central banks to deal with, but I think they're taking the right steps. I think they are getting out in front of it, raising interest rates, playing or at least talking a tough game, and we'll see how it goes.
I want to talk about recession fears more because we can see Fed and ECB, European Central Bank, become more hawkish recently. And we look past and look into the history, we see the similar patterns linked to the Great Recession. Do you have this feeling these days?
There are a number of scenarios that could play out that would run
just
along
like
that scenario for sure. And one factor we haven't talked about were the financial markets either, because we've just come off a again, a historic bull market,
right.
and in equities and in
stock market,
in debt markets as well, and so we've already begun to see them unwind a bit. Will that continue? Will it gain momentum? And will there be a spillover effect on the economies from that? Certainly raising interest rates will slow the economy down. Of course, that's what it's
even
intended
further
to do. Yeah.
After COVID.
And so can you control all those different factors, the financial markets, the labor market and the goods market, and of course the energy market are all these balls that we have to keep up in the air and make sure that none of them hit the ground. It's going to be challenging. And I think that, you're going to get maybe excessive inflation or a recessionary economy, one or the other, because you're not going to be able to fine tune it to that degree
no chance to dock that
exactness. But
right.
It's all of that probably does mean that the financial markets will continue to decline. That's at least my feeling.
I see. That's why it's so important to have you here to explain more about your point of view. You talk about semiconductor industry. It's so interesting. It grabbed everyone's attention these days, right? When you talk about Taiwan semiconductor industry. What are other industries that prefer a strong anti-dollar environment, in your opinion?
Well, more broadly, I think any capital-intensive industry will want a stronger currency because their ability to purchase the equipment that they need, and invariably that equipment is imported, will impact their competitiveness in the longer run. So wages actually account for a relatively smaller percentage of their total cost. The depreciation of that capital equipment, a much higher percentage. So there are obviously other industries certainly supporting semiconductors or that are perhaps beyond the electronics industry altogether that would be in the same category. But I think it's a question of how you want to shift the interest rate policy in order to influence the economy itself. And again, historically, government policy has been inclined to try to keep the anti-dollar weaker in order to promote exports. But we're not the same economy we were 20 years ago, and certainly not 30 or 40 years ago. And so I would like to see a change in that mentality myself for the ability for Taiwan to upgrade its sophistication, its value add, and the quality of the products that it's producing. But at the same time, when you weaken the anti-dollar, you're taxing your own population because all those imported consumer goods that they have been buying will become more expensive. And so to the extent that we want to create a more domestic demand-oriented economy, so we're not as export-oriented as we had been in the past, requires a stronger anti-dollar as well. The problem, though, is that in these times we can't necessarily choose exactly what type of currency policy we want. If the U.S. Fed is raising interest rates so aggressively, that means we'll have to raise rates here as well, and there'll be a price to pay for that.
It's a chain of effect, right? One always connect one another.
Exactly.
Do you think it all happened in a very interesting timing? As you said, we're trying to transform, right, into a capital-intensive country. Do you think what there aspect that we need to work on more? Because we have this slogan and for this idea for like 20 years, 10 years at least. What is lacking? Just following up that suggestion.
I think we actually have a lot of what is needed. So in order to upgrade the economy like that, you need to invest basically. You need to invest in human capital and education, and Taiwan has a very well-educated populace and a very good system of universities here. Very good STEM educational system as well.
So the engineering,
and the
science, math,
right? Exactly. All of that is I think, superior in many respects to even a lot of the well-advanced economies. We have the talent pool here. I mean, you look at, again, the talk about trying to move the semiconductor industry to the United States, and everyone in Taiwan, at least from my friends anyway.
Of the proud.
Well, we're very proud on the one hand, and realizing that it's not going to be very easy to do on the other hand, because there is just so much infrastructure that was required for that. It's not just about putting a fab in Arizona and off you go. So the entire supply chain has to be moved along with that. And that's why China's never been able to build a competitive semiconductor industry. It's why Japan has been falling behind. In fact, they're pretty much out of the game as well.
Right.
This is a very unique skill set that Taiwan has, and to at least have that core and then build on it, I think, is another aspect of that. So you can build, more IC design companies. You can build more IoT businesses and so forth that use the chips in more innovative ways. And so expand on your strengths there would be, I think, the
we're getting
way
there.
to go. Yeah, we're certainly very, very close. Yeah.
I see. Let's circle back to inflation. So as younger generation, we care more about, when is it I'm able to, have my own house, right? The housing issue, the mortgage, it all tightly with the interest rate hikes. What's the influence for now already very red hot real estate market?
Well, the real estate market in Taiwan has been a very bumpy ride over the past few decades. There have been booms and busts along the way, and there have been surges in prices, and then sometimes followed by increases in supply as well. A lot of it driven by, though, capital flows. And so we saw back in like 2008, for example, a very clear period where there was a very substantial flow back of capital from China back into Taiwan, and that surged the property market here and created a gap between prices and average wages, to the extent that it priced a lot of people out of the market. Now that's been sort of stabilizing a bit. There was another blip in 2012, but since then the market has been sort of stabilizing. But again, this gets back to wages. It's not just about lowering housing prices, it's also about increasing wages. And these are all policies that need to be thrown into the mix. There has been a surge of building, though, again, in response to the higher prices, in response to policies to encourage building. And so I think we're going to see some rectification of that, but it's probably going to mean lower prices, or at least very flat prices for housing in Taiwan, which from a social standpoint, a societal standpoint, is not a bad thing. Obviously, if you're trying to make money on your home, it may be a little more discouraging. But I would expect that, given the fact that, as I said, there's a lot of supply coming online, prices are already pretty high to begin with. And of course, demographically, Taiwan's population has not been growing.
Right.
In fact, Taipei has been declining as well, which is what you would expect, because people are moving out to the cheaper suburbs. There's a better transportation infrastructure to allow them to do that.
Make it affordable, right?
Yeah. So, I mean, that's all a good thing. So I don't want to sound negative. I'm actually quite positive about the housing picture in Taiwan, but I'm not that positive about the housing market in Taiwan.
Oh, I see. There's a difference. I see. You talk about wages. Let's talk about that more. Personally, I've experienced, the stagnant for a very, very long time, right? Everyone shared the same experience. The wage or the real wage growth, just being very, very slow. And compared to the inflation hikes, what's your take on that? It's never gonna be a balanced, day, right?
Well, look, I mean, this is almost more of a political than it is an economic discussion.
Why do you say that, political?
Well, because what we have seen with the wage picture in Taiwan is similar to what we saw in the United States, and that is globalization. The fact that so much production capacity is moved basically to China, and then from China to Southeast Asia as well.
But the wages in the States are rising. They're like compete for talent of good caliber like crazy.
More recently, yes.
Oh.
But if you look back, and again, you have to look at different pockets, right? So in the United States, GDP has actually been growing pretty well. But if you took out Wall Street and Silicon Valley from that picture, you'd probably see a very different number and a much lower number as well. And so the bulk of the number of people who are actually working have not seen substantive wage increases. And that's the same issue here in Taiwan. Now that we are seeing this sort of backflow or step away from globalization, we will probably see some of those factors reverse as well. That is to say, wages will begin to increase as we try to onshore more of that production here in Taiwan and elsewhere. But of course, globalization also created tremendous efficiencies in the economy. So the top line GDP number was much stronger. So what you're really talking about is the wealth gap or the income gap issue. That's why I say it's really more of a political issue, or it certainly touches on the political issue a lot more.
Are you talking about tax policy to reduce the gap?
Well, this is yet another step as well. And certainly that is the direction that the Biden administration is moving toward. And to the extent that the U.S. tax rate creates a sort of cover, if you will, or a baseline for other countries to begin to adjust their tax policies, then you might see tax increases elsewhere. But there is very strong evidence to suggest that income tax rates do a lot to reverse the wealth gap. And so, what we may be seeing with the reversal of globalization and, as you pointed out, the changes in taxation policies around the world, we might start seeing that wealth gap narrow, wages increase, but also perhaps a slight slowing in the economy.
But on the other hand, if I may say, would it be good for financial environment as a whole? Because after COVID or after Hong Kong, Singapore or Taiwan were trying to, replace or trying to as good as Taiwan's, Hong Kong's financial status, right, in international society. But once adding upon that tax policy, do you think there is give and take?
Well, yes. I mean, this has always been a problem of attracting talents from Hong Kong and from Singapore, because those two environments have very low personal tax rates. This is certainly an issue, and I don't know the workaround myself, but I would say that at the same time, at least at the margin, there is a greater draw for at least Hong Kong-based financial professionals to move to Taiwan, in part because no matter what we said about the price of housing here in Taiwan, it's certainly a lot cheaper than it is in Hong Kong, and that's one factor that also
is attracting.
Right, if you pay higher taxes, but you have a lower cost of living, there may be a bit of a wash effect there. And so I agree that this is a unique opportunity to attract some of that talent. But realistically, I think it'll only be marginal flows, because Taiwan still has a semi-controlled capital flow environment and a very highly regulated financial market here. But nonetheless, I think we can still attract some professionals. But more importantly, I think the point is we need to raise wages here in Taiwan to create a domestic market. There are a lot of companies that try to start up, either a mom and pop restaurant to maybe a startup e-commerce operation or app-based business that want to build a business from their base in Taiwan, because you can always do better setting up a business in your home economy. But find that the purchasing power of the local economy is just too low. This I've seen happen many times. So for that reason, I think you can create a whole new different industry segment, a service sector or a e-commerce or a service, a
new
software sector industry developing with a higher wage or a more domestic demand-driven economy.
I see. All right, to the best of my knowledge, the cause of inflation could be quite complicated, but one of it is maybe the most significant one is energy crisis. And right now we have the war in Ukraine. Can you draw comparisons between now and what happened in the 1780s energy crisis in the Middle East? Do you think we can, learn from the history, or is there any implication there?
Oh, we can always learn from history. We may still make the same mistakes, but at least we'll know why. But in any case, it was actually a very similar backdrop, which is quite interesting to think about. In both the respect of the monetary policy, that was the backdrop to that scenario. Back in 1973, we had already seen a very aggressive expansion of the monetary base in the United States, largely because of the funding of the Vietnam War,
right.
And also a very aggressive domestic anti-poverty policy as well. So that was the backdrop there, and then suddenly we had and of course that created the devaluation of the price of oil because the money supply increased so much. And so the oil producing countries used the war with Israel in 1973 as an excuse to embargo the United States and other Western economies and created this massive shortage of oil. And of course, that persisted for a while and triggered the whole inflationary trend that followed thereafter, and as you pointed out, extended well into the 1980s. Now, why did it extend into the 1980s? In large part because the Central Bank of the United States refused to raise interest rates in the face of that expansive monetary base and the rising inflation. And thus the problem just persisted. And of course, once inflation gets sort of burnt into people's perceptions as a backdrop of the economy, then it becomes self-perpetuating. Now we're seeing, again, a period of very expansive monetary policy because of not only COVID, but ever since the 2008 financial crisis as well. Once again, we have a oil-producing country invading a neighboring country, just as the Arab nations invaded Israel back in '73.
Similar. Yeah.
And in both cases, created this bottleneck in oil supplies. In the case of Russia, it's the West that was imposing the shortages by embargoing Russian oil and Russian natural gas without an ability to replace it all. And so we've created this not a natural, but this artificial shortage in the oil markets, which has surged oil prices. And I don't think it's going to be resolved anytime soon. Even though the U.S. has a lot of capacity that they could shift to Europe, it'll take years for them to build the facilities to be able to export the natural gas and for European nations to be able to accept it as well. You need very special facilities to be able to do that.
Yeah, because I was going to ask, do you think the tight energy market will continue to the end of 2022? And you're saying it will pass this year.
Almost certainly.
Longer time, for years.
It'll take years to resolve that reduction of the Russian capacity. Now, if suddenly the war ends, everyone comes to an agreement to go back to the original structure, then we're okay. But I don't see that happening.
I see. We talk about a lot of broad topics, right? The oil supply and demand, Fed, European central banks. I want to circle back to your personal experiences because it all comes back to our first topic, inflation. You've lived in here for so long. What's your personal experience throughout this time?
Well, I often say there are different types of inflation that we don't always think about. For example, the goods market in Taiwan has been very stable in pricing for much of the 30 plus years that I've been here. But the property market has surged. And when you consider that ultimately, you do have to pay for your abode. You have to buy things at stores that have to pay for their physical storefront as well. All this will eventually feed into prices. But in fact, it's been rather centralized. So the surge in property prices in Taiwan have been pretty much focused on the Taipei residential market in particular, and the higher end market in particular as well. So it sort of depends on what it is you're buying. But the other feature that has helped absorb a lot of that inflationary pressure has been the stock market too. We've seen a lot of stock price inflation taking place, meaning prices have been going higher with that excess buying power, with that excess money that's been produced in the economy, and thus not being absorbed in the goods market. So we've seen volatility in prices of other assets, but not of goods in Taiwan. This is the first time we're actually seeing it now translate into the goods market. And once you have that sort of precedent in place, then we as consumers become accepting of it, and the providers of these goods realize that they can start raising prices. And of course, I'm not suggesting that they're doing it nefariously. It's their own costs have been increasing as well. But nevertheless, it starts this trend where you start seeing a succession of price increases across the board.
I see. We're approaching our end to our conversation, and before I wrap everything up, people called you Mr. Taiwan for years because you were able to, have this very comprehensive grasp toward Taiwan's knowledge, and then introduced to foreign environment investors. So everybody is asking and wondering, what's your prediction toward Taiwan's stock market, right? A lot of people remain optimistic. What about you? In a word, I'm not optimistic now. I had always felt that we were getting to the end of this bull market. And I said that, as is often the case of a lot of bull market late periods, you can see a surge in prices taking place. Okay,
there was a lot of momentum in prices as well, and that's why I had originally thought that we could, in that surge, reach to, I said 20,000. I really meant 19,000 something, but higher than we have gotten. With the invasion in Ukraine and of course the other factors we've been discussing now, rising interest rates and inflation, I don't see that as possible. And in fact, I do see the market trending lower probably for several quarters to come.
Any specific predictions?
Well, the only reason I had said 20,000 back then was because we were close. It's a big number, and markets tend to sort of surge toward these big numbers.
Yeah.
But I don't typically try to put a number on it. But
Okay.
I would say the direction is downward and probably down considerably from here.
And you're saying it won't be a very short period of time, right? It's gonna last for at least quarters?
At least several quarters. I mean, we're
quarters.
talking typically, and I don't have any reason to put a time frame on it here, but typically these markets cycles tend to work out over the course of 1 or 2 year cycles.
Right. My last question is, we can see recently that foreign capitals withdrew 170 billion NT dollars recently. What's the implication for our market?
Well, I don't think it's Taiwan per se. I think you'll find that
Okay.
all the emerging markets saw an
It's all the
exodus
same?
of capital. And this is in part because the rising interest rates in the U.S., A, makes the U.S. dollar more attractive. B, it will probably put pressure on the exporting markets that are more requiring international capital. And then finally, of course, the rise in oil prices more directly impacts economies in Northeast Asia, Korea, Japan, as well as Taiwan. That puts them at a particular disadvantage. So I think these all factored into this recent exodus.
Well, Peter, thank you so much for joining us today. We learned so much from your analysis, and I hope we can have you back as soon as possible to explain this interesting time more. Thank you so much. And also, thank you for watching. Today is our first episode. Thank you for watching Taiwan Plus Point, and I hope I will see you next time. Bye-bye. For more information, please download Taiwan Plus app.